check again. It is not stated the number of points to be given, but you are just, it's an open question. Analyze and evaluate. You evaluate based on the information given. So if you have read on business risk and they give suggested in the business risk, they give maybe when you are reading, you see steps in mitigating business risk or identifying business risk. In this case, if you provide answers outside this case, you might not be able to get your answers, you might not be able to get your marks because there's a scenario that you have to relate your answers to. And all your points, you can see all the points I read earlier, they can be found in the questions in this scenario. In this way, whatever you write, as far as can be found in the scenario, you are guaranteed to get it. So let's go to the part B, which says analyze and evaluate the business risk that will be assessed by the director of CRP. Wow. No, the A and B are similar, but it's different. The first one is assessing the risk of CZL, the parent company, and the second one is assessing the risk by the directors of CRP, which is subsidiary, the new subsidiary. So let's see the suggested way to answer this question. Business risk that will be assessed by the directors, this important directors of CRP are subsidiary company operates in another country with different laws and regulations. Yes, it is confirmed in that scenario, is in South Africa. The company operates in high-tech environment and inventory might be subject to obsolescence, similar to the first one. Then the factory in South Africa may have been acquired at the amount far more than its value. Engineering expertise belong to another company which had ceased from existence. It might be difficult to hire to get technical help. Moving from auto part manufacturers to the manufacturing of drone is a dramatic shift requiring new expertise in manufacturing and sales. There is need to prioritize national careers and international organizations like DHL for economically sustainable sales to be attained since these have had arrangement with the airline for the lifting of mails and parcels. There are no plans yet for the distribution of the product beyond using subsidiary, the acquisition of which is yet to be consummated by making payment. Okay, okay. Let's go to the part C, financial statement risk to be considered in planning the audit of CZL. Number one, due to the possibility of rapid obsolescence, inventories in financial statement might be overstated. Serious attention needs to be paid to the net realizable value in the valuation. The watch of the factory in South Africa may have been overstated as it was acquired from another company. There is need to do proper valuation of the net assets acquired so as to determine the right amount of goodwill or bargaining purchase as relevant. Provisions must be made for 55% of the value of the subsidiary CZL, 55% of 450 million US dollars payable in February 2017. There is need to consolidate the account of CZL in financial statement of CRP. Then the exchange rate volatility will affect transactions between the companies and its parent company. There's also risk of misstatement of opening balances. This is the end of question one that centers on business risk and financial risk. Any questions so far? Any questions so far? Can I proceed?
Yeah, proceed.
Yeah, thank you very much. So let's go to question two. Question two is another case study of a young entrepreneur trading which is an online trading business established by Yaounde Tumfere. The business buys assorted household goods from different manufacturers locally and abroad. Others are made online from suppliers. Customers also order goods online from Gate, and the invoices are processed and transmitted to the store from where the goods are dispatched to the customer through delivery stores scattered all over the country. Yet has not been satisfied with the work of the previous auditor and has approached your firm to be appointed as the new auditor. Appropriate financial professional clearance has been resolved for the work to commence. You are the audit manager responsible for the engagement. You have been assigned on the job with some new trainees who are not conversant with controls in online businesses. You are required to, number one, A, discuss 5 of the controls an auditor should focus on to assess effectiveness of control in an online system such as Yet. B, evaluate 4 risks associated with the business of Yet in the application of electronic data interchange in an online business, and 4 effective controls that may be put in place to minimize the risk. That is all. It's as simple as this. In a nutshell, this question is asking about control systems, but it distinguishes itself by mentioning online businesses and to the cases mentioned as related to young entrepreneur training. This must be put in mind. You are asking about control systems, but the control system the audit need to do must be in online settings. So this must be taken into consideration. And if we are providing online, control issues that is not related to online, you might not be able to get your answers. So your answers must be related to the scenario. That is the essence of giving the background information. So let's see how to answer this type of questions. If you have this type of questions, how can we answer this? Number one, A is saying all systems are usually efficient and effective for the users. They create additional problem for the auditor who needs to assess the effectiveness of the control systems. There are 2 categories of system controls in an online system. Number one is general controls and application controls. Then you explain further what are general controls. General controls in an online system could include the following. Number one, access control. Access control means you explain there must be effective control over access to the systems and its file. This is because in an online system, transactions are processed as soon as they are inputted. Another type of control, general control, is software control. This should be control written into system software to prevent or dictate unauthorized changes to the program. Transaction log control. Transaction log should be used to create audit trail. The computer program should be written in such a way as to generate the audit trail for any transactions on request. And internet access control. Firewalls should be used for systems that have access to the internet. Then application controls in online system. Example of control include pre-processing authorization controls such as logging onto the system and the user's names and password. Data validation control. Data validation check is the software to check the completeness and accuracy of processing, such as checking that a product code has been entered with correct number of digits. And balancing control. Balancing, checking control totals of data submitted from remote terminals before and after processing. Then the part B, electronic data interchange systems can improve the operational efficiency of an entity, but they may generate the following problems for the auditor who have access to efficiency of the system control. Number one, the lack of proper audit trail, an increase in the level of dependency on the computer system of the organization, and the possible the computer systems of other entity. Any failure or control weakness in one computer system may have an impact on the computer system that is being audited. There may be a risk of loss or corruption of data in the process of transmission, and there will be security risk in the transmission of data. Auditors should expect to find effective control in place to minimize the risk inherent in electronic data interchange systems. Typically, controls will cover such matters as control over transmission of data such as encryption of data before transmission, acknowledgement systems, and the use of authentication code for sender of data, monitoring and checking of output, virus protection systems, contingency plan, and backup arrangement. This is a template for answering questions similar to question 2. In answering this question, you can see that in addition to stating the controls, explanations were made. It is very important to write and define the points in addition to listing, because this is a professional exam. You have to be detailed in your responses and give specific examples and justify your points. If you are giving a point, let the examiner understand the point you are giving and how related it is uh, to the questions. Audit is voluminous, you cannot cram it, but understand the basics and be able to explain it in your own word. That is just it, the idea. Okay, any questions so far?
No question.
Okay, thank you. So let's continue. Let's continue. Let's continue. Question 3. Let's see the way this question is set. It's a standard questions. Let's see this the way the question is said. A authority publisher limited has been in printing and publishing business for many years in Ibadan. The company has been performing well with a competitive advantage over many companies in the industry as a result of the engagement of high-profile teams of personnel and in-house printing of its publishing books. The board of directors comprises of two brothers and their wives. The older brother is the chairman and the younger the managing director. The fortunes of the company started dwindling in 2013 when conflict could no more be resolved amicably among the members of the board. The chairman, being a majority shareholder, assumed executive powers by combining the roles hitherto played by the managing director with his own as executive chairman in 2015. Governance of the company became unsettled and key staff of the organization started resigning in turn. In 2016, the financial report of the company revealed its inability to pay creditors and supply of raw materials became irregular. In addition, the level of receivables became too high with high figures of doubtful and irrecoverable debt. Your firm acts as the auditor to the company and you have been presented with financial statement for the year 31st December 2017 for audit. The financial statement were prepared on going concern basis. Based on this information, you are required to identify and explain the objective of the auditor in the area of going concern in accordance with International Standard on Auditing 570, ISA 570. You are also required to explain the going concern assumptions and the implication for the financial statement if the entity is not a going concern. You are required also to explain the going concern duties of the directors. And finally, evaluate the risk assessment procedure to be performed by the auditors on the going concern status of the entity, according to ISA 570. So, how do we answer this type of question? How do we answer this type of questions? Let's see. In answering that kind of questions, number one, the objective of the auditor in this area, according to ISA 570R, to number one, in auditing the financial statement, we need to obtain sufficient appropriate audit evidence about the appropriateness of the management use of the going concern assumptions in the preparation and presentation of financial statements. Conclude whether a material uncertainty exists that may cast significant doubt on the entity's ability to continue as a going concern. Determine the implication of the audit report. This is a subjective area where judgment is usually required to assess the uncertainties surrounding the assumptions that were made by the management in reaching the conclusions about the going concern status of the entity. So, part B, the going concern assumptions means that the income statement and statement of comprehensive income and statement of financial position are prepared on the assumption that the entity will continue in operational existence for the foreseeable future. If the entity is not a going concern, there will be significant implication for the financial statement. You give example. For example, the distinction between current and non-current for both assets and liabilities cease to have any meaning. All assets and liability become current. All assets must be carried in the statement of financial position at net realizable value, and there may be additional liabilities. Auditors need to be satisfied that the going concern assumption is appropriate to the financial statement under audit. This will involve an investigation of the financial and the operating position of the client before the end of the reporting period. If these reviews indicate that the going concern assumption may not be appropriate, further investigation will be needed. I want to call our special attention to this answer. Part B of question 3. Let me show the question again. The question just say, explain the going concern assumption and implication for the financial statement if the entity is not a going concern. Again, explain the going concern assumptions and the implication for the financial statement if the entity is not a going concern. So in answering these questions, can see that going concern was firstly explained, then justified with examples, and cases were presented in case it is not going concern, what should be done? So the answer, though the question is small, but answer to this must be detailed and be able to explain the process and what to be done. Okay, so the part C is saying going concern duties of the directors. Going concern duties of the directors is important. In preparing the financial statement, the director must satisfy themselves in accordance with International Accounting Standard 1, IAS 1, that the going concern basis is appropriate. In some countries, there is a requirement for large companies, listed companies, to disclose the fact that, in the opinion of the directors, the company is a going concern. It is therefore the responsibility of the management the ongoing to make the going concern assessment. It's as simple as that and straightforward. So the D part is saying international standard on auditing 570 requires the auditor must perform risk assessment procedure to consider whether there are events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. If the management has already performed such assessment, the auditor must, number one, discuss the assessment with the management, then determine whether the assessment identify any relevant event or condition, and if so, determine management's plan to addressing them. If the management has not yet performed such an assessment, the auditor, what should be done? The auditor must discuss the management the basis for the intended use of going concern assumptions, inquire of them whether event or condition exists that may cast significant doubt on the entity's ability to continue as a going concern. Then in evaluating the management assessment, the auditors must consider the same time period. If management look less than 12 months into the future, the auditor should ask management to make a reassessment looking at least 12 months into the future. The auditor must also inquire if the management is aware of any relevant event or condition beyond this time period. Simple. In this way, if you answer the question in this way, you are guaranteed to pass because you have answered the questions in relation to the case presented. The objective of auditor in the area according to ISA 570. What does IS 570 says? What are the requirements of this standard? You have stated it. The standard does not change. Okay, you can go further and give examples and relate it to get extra marks. Okay, to win prices, ICAN prices. When you state the standard, you have stated the standard that this you have uh, fulfilled the righteousness. You can also go further and cite cases in instances from the case study and present it to justify your point. Then the point B, just going concern assumption, you have defined it, you have explained it. Define is different from explain. The question asks for explanation. In explanation, you have to know what it is, how does it happen, in which case does it happen, and then how to deal with it. That is explain, and it is detailed here in this way. If you answer this question this way, you are guaranteed to pass the answer. Again, it is important that when answering questions, ICAN question, I know in ICAN advanced audit, there may be a lot of case studies and it involves reading and understanding. Make sure you understand the questions very well. It will help you in answering questions. The For the case of this question two that is asking about the controls in online systems, even if it's general controls that you list it, but try as much as possible to show that, okay, if you state a particular control, general control, application control, for instance, because I observed that I can student when they are case study questions like this, we get like what we know. I know general controls. Maybe it's not online. If you check your ICAN materials, your ICAN pack, you might not see direct cases here. But the essence is you can relate it because as an auditor, you cannot be auditing one particular company. You have different companies. You can work in any company, can be exposed. That is why they are presenting these cases, and you should be able to relate your skills into these cases. And the same also applies when they're asking about business risk in question one. They give examples of multinational companies or transnational companies. The company in one country buy another company in another country. Okay, so if you know the answer, but you are doubting whether it's related to this case, try as much as possible that the answer you can relate it to the case they are presenting. Then you are guaranteed to pass the exam. Are you with me? Any questions so far? Any questions so far?
None from my end.
No, no question.
Okay, I believe you understand it. I say it again. Advanced audit is full of case studies. You have limited time. Take your time to understand the case studies so that the questions they are being asked, you know how to answer the question very well. Then you be mindful of time. Don't waste time on one questions. Be as fast as possible and ensure your points are related. That is the way to get answer to get ICAN mark. You will see some people they say they wrote a lot, at the end of the day they fail. You can write a lot, but if you are not answering the question, there is no how you can pass it because examiners want to see. They are testing your ability. They are also testing how you can relate the materials you have read with different scenarios. That is why you see a lot of scenarios in advanced audit. So let's go to the last question for today. The last question is small, but I tell you, as small as it is, to answer this question, it's much because I can see. Yeah, let me read it. You are an audit manager in a firm of chartered accountants. Your firm has been appointed as a joint auditor with another firm to carry out the audit of a client, Opeluyeri Automotive Company Limited, which has acquired another company in the same industry to expand its business across states and the southwest zone of Nigeria. Reading the scenario, some questions should be coming to your mind. Joint auditor, the client has also acquired another client. So what are you supposed to do? You are required to explain the concept of joint audit. Emphasis on explain. The second one, discuss the reasons why joint audit is considered desirable. Discuss again. Then the last one is explain possible setbacks for engagement in joint audit. These are open questions. The case is small, but I tell you, these questions are deep because they are open. Explain, discuss, explain. So let's see suggested way to answer these question. How can we possibly answer this question? One minute. One minute, please. Yeah, solution to question 4, the concept of joint audit. What do they mean by joint audit? Yeah. So to explain this, explain the question asks for explanation. A joint audit involves two or more audit firms appointed to audit the financial statement of an entity. Joint audit may occur in other situations, but they are most commonly found in group audit. Additionally, in particular, when a group acquires a new subsidiary, it is not unusual to appoint the group auditors jointly with the subsidiary existing auditor, at least for a period of time after the acquisition. This second part is very important because if this part of the question has not been there, you might not lose mark if you did not state it. Let me see. Uh, because of this clause that is there, that Okpelu Automotive Company Limited has acquired another company. So it is important to state it when explaining joint audit. Because maybe you are reviewing Pathfinder, and this case of joint audit is asked in 2 ways, in 2 years. The answers might not be the same. Here, it is essential to include this part, to state it, because it is stated in the questions. The question made us understand that the client acquired another subsidiary. So it is very essential. So if you define joint audit to this point, you may not get the full mark. That is the essence of putting the case studies, and you must use all the information in the case study in answering your questions. Okay? When a group acquire a new subsidiary, it is not unusual to appoint the auditors, group auditors jointly with the subsidiary's existing auditor, at least for the period of time after the acquisition. The joint audit provides a joint opinion on financial statement of the subsidiary. The key to successful joint audit is good communication between the firms, including joint planning, meeting, regular discussion between the firms at all the key stages of the audit process. The meeting and discussion should be fully documented. You can see, just to explain joint audit. You can add more information, okay? But ensure that the information you added, they are relevant to the question being asked. Okay, you have to be detailed. Okay, you have to be detailed and explain. You write a lot in audit. There is no shortcut to it, but ensure that what you are writing is relevant to the question. That is the most important thing. So let's go to second one. Reasons for the desirability of joint audit. So how was the question asked? Let me check again. Yeah, discuss the reason why joint audit is considered. Sorry, you are discussing. Discuss. Emphasis on discuss. Don't list. I'm sure we are professionals. This we already know. So the reason why joint auditor might be appointed are: number one, the client company may be so large that it requires the service of one or more firms of auditors. After the acquisition of large subsidiary, using joint auditors may help the transition process while the group auditors become familiar with the new subsidiary. The old auditors should be familiar with the business of the subsidiary and should pass their knowledge over to the parent company's auditors. Uh, for the parent company's auditors, this should accelerate the process of getting to know the business of the new subsidiary. Joint auditors may provide a higher level of technical expertise than either audit firm will provide individually. Improved geographic coverage may be obtained for audit where each of the joint auditors on its own does not have offices that cover all the geographical locations of the component companies in the group. Then it has been suggested that two medium-sized firms might join forces and tender for audit of a company for which the auditor would normally be one of the big audit firms. This is a possible way in which medium-sized firm may try to break the monopoly of the Big Four on large company audit. These are just a sample of how to answer such questions. In each of the points, you can give illustrations. Okay, you can give illustrations and make your work to be detailed, but be mindful of time. It's also important. So the last questions, the possible setback for engagement in joint audit. The possible setback for engagement in joint audit, then possible disadvantage of joint audit. That's what they mean. So number one, what are the possible disadvantages? Number one, there could be extra cost to the client, because it's really expensive. It is likely to cost more to use to audit firm than to use one. So the setbacks, because to get audit or one audit firm, the audit firm, they have to bring their resources as well, and they're going to charge. Yeah, it's most likely. The second one is possible inconsistency between joint auditors in the audit methods that they use. There's another one because each of the auditors, they have different methods and it might cause issue. If so, there may be problems in reaching agreement on which audit method to use. And if there is this disagreement, it may also affect the audit what they want to carry out. Yes, because each of them might want to place seniority. My method is to my method is superior, and especially the audit staff, we want to stick to the policy of the company. They don't want to break the company's policy, and when they get to the field, it is possible to have breaches and clashes in the audit procedures. For example, maybe the staff of audit firm A has come to review, let's say, to review the current asset and taking samples. Company B might not accept the level of samples. May say the sample is limited, bringing discussion, and it might also slow down the outcome of the audit because it takes time to reach agreement. Then the possible difficulty that the two firm may have on agreeing on this division of work, yeah, it's possible that the two firm may have on division of work. Who will do what is a tough decision. I know the distribution of work should be based on competency, but when it comes to joint audit, each of the audit firm will not want to play weak, so it's going to be like issue with that, who will do what do you do, what will your staff do, what will my staff do. It's going to cause an issue. There's additional problem that will arise in monitoring and in controlling the audit work of two different firms. It's possible. Then the additional firms may find it difficult to work together. The two firms may find it difficult to work well together, and each firm may try to become the lead firm in the joint audit. Yes. When you state this point, you also can also give additional information. It is possible. For example, if audit A is doing this, audit B is doing this, so each of them want to play the edge. No one wants to play the subordinate role. So it might cause issues. Yeah. Then if there is claim against the auditor for negligence, wow, in the conduct of the audit, there may be some difficulty in identifying which of the joint auditor is potentially liable. Of course, it's possible because each of them want to minimize the cost. There'll be transfer of risk and it will be difficult. All these are practicable, and you can give example. Just create a scenario. For example, if auditor at the end of the day, what's the possible example? Maybe there's a delay in concluding the financial statement as a result of the joint auditor. Then this lead to the company filing the annual returns late. Most companies, because it's not their fault, they don't take the responsibility for the penalties. This is the audit firm that will take it. In case of joint audit, which of the auditors will take it? So it might be a problem. It might be a problem. Which auditor will take the liability because it's a fault. It's the fault of the joint audit. But because it involves more than one audit firm, so they claim of auditor's negligence in the conduct of the audit to be difficult. You can just cite examples like that. It's possible. This shows that you are actually an auditor, a professional auditor in the field. Okay, we have a few minutes left. And we have come to the end of the question and answer, but I would like to just go back to the first question for the advantage of those that joined late. But before I go into that, does anyone have any question? Any question from anyone?
Hello.
Hi.
Yeah. Yes. Thank you, Madam Rashida. Um, the question I wanted to ask, you've say much on it, is on the last question you treated on the joint audit. The B and the C part is, I think, is specifically talking about the advantage and the disadvantage of joint audit. Abi. Then you said something that you said we should make sure the way we answer the question, we should write voluminous text. Is it compulsory we write something voluminous, or we just go straight, just write the point? What's your take on that?
Okay, thank you for that question. It's very critical. Hmm. Uh-huh. To know what to write, there are things you need to consider. Number one factor is the way the question is being asked, then the time. Regardless of the time, we are saving if we are saving time but you don't answer the question well, there's no point. So you have to work with the two, the way the question is being asked and the time. So I will show you. This part, this is question what? Question two. Question two is saying discuss, right? When you are discussing, it's an open question. You are discussing something. When you are discussing, just like you're having a conversation, you explain the point to the point that the person will understand it. So the question whether to write voluminous or not voluminous, it depends on the way the question is being asked. If the question is asked discuss, it is expected that you write. But how much you write is also depend on time. And you don't just write, ensure what you are writing is relevant. Okay, what I usually do during in cases like this, when I was writing my exam, what I do is when I see, I watch the way the question is asked. If you say explain, if you say state, if you say list, if you say mentions. So where they say discuss like this, I know I'm supposed to explain. I don't just list. So if I know like 5 points at minimum, I know I must give minimum of 5 points. I write at least 4 lines, 4 lines for each of the points. Okay, then I leave the space. I know what am I doing? I'm saving myself. At least I'm explaining. The only problem maybe they said I did not explain enough, but at least I've explained. Then I give space. Then come back if time permits. Come back to add additional information as relevant. I hope you understand. So it's not about the voluminous, but bear it in mind that if you have time, you write in audit because you must justify this point you are giving. If you look at the third point here, it is being listed. But if you have time, you can explain. The last point, all these points are listed. They are listed. If you have time setback, the extra cost for the client, how extra cost can occur. If you have time, you can state it. Give example, give scenarios. It fetch you marks. I hope I've answered you. Was I able to answer you?
Yes, 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 yes. Thank you very much. Yes.
Any other question? I think we have 2 more minutes. 2 more minutes left. Okay, there is no other question. Thank you very much for joining. Thank you for joining the challenge. It's been a wonderful journey, and I'm very confident to get to this point. The beauty of ICAN is try as much as possible to go through the packs, and that is the essence of the study pack. I can tell you that's how I passed. Uh, because we don't know where ICAN will bring question from. So if we have time, it is advisable to read ICAN pack from the first pali to the last page. And that is what you have done. You have done your part, and I pray God will grant your effort. You get the wisdom to answer correctly, and you come out in flying colors.
Amen. Thank you.
Yeah, that will be the end of our question and answer section for the challenge. I hope to see you as a uh, is it a member to call you a professional colleague very soon. Thank you for joining.